How to get the funding for real estate investing. That's what we're going to be talking about in this video. Hey, Mark Walters here. Before we get started, I want to make sure that you get access to my free book, How to Find Millions in Private Money Loans. You can do that by going over to findprivatemoney.net. Findprivatemoney.net. You can download that. I've got some other good things for you that you'll be able to access as well. That should hopefully help you. So go over there and also make sure that you get my free daily extra income sources newsletter. You can find that over at passiveincomestacking.com. I send it out every single day to tens of thousands of people. It's absolutely free. So if you're interested in new extra income sources that you can be doing from home, definitely get access to that over at passiveincomestacking.com. Also, one last thing, over on my website, realestateschool.vip, over on the school store page, you're going to be able to find a number of different sources where you can be tapping into them to be able to do some real estate investing as well. I've created some relationships over the years, and I've got links to that funding over there at realestateschool.vip over on the school store page there. All right, let's jump right in. There are a number of different ways that you can be financing your real estate investing, and we're going to be talking about a number of them here. Obviously, as real estate investors, we'd like to stay away, if at all possible, from traditional kinds of financing, and the way that we do that is through creating creative real estate financing scenarios. So seller carryback, buying property subject to the underlying financing, and a myriad of other creative ways that we can be acquiring real estate, controlling real estate without having to go and get a loan. But for those scenarios where we do need to go get a loan, that's what this video is going to be touching on. So first and foremost, a lot of times when people are thinking about real estate financing, they automatically jump to hard money lenders. Now, hard money lenders can be very helpful for a real estate transaction, but you got to understand they're expensive. So you've got to have a lot of meat on the bone for a particular real estate deal in order to make that work. But hard money lenders are out there all over the country looking for real estate investors to lend on. Now, a lot of times I'll hear from people and they'll be asking, how can I find money for deals? And at the same time, they're thinking, I'm not credit worthy. They've got maybe low income, no income, bad credit, things like that. Well, the good news with hard money lenders is they're mainly focusing on the property that is going to be used as collateral. They want to know that there's a certain loan to value there. They want to make sure that there's equity in the deal. So they're going to be doing some kind of a BPO, a broker price opinion, to figure out what the value of that property is, or they're going to get some kind of a licensed appraiser out there so that they can find out what the value is on that home. So that's the good news. If you don't have great credit, you don't have the income, don't worry about that so much when it comes to hard money lenders, because they're mainly interested in the value that's in that property, the equity that's in that property from the standpoint of their collateral. Next, you've got, kind of in the same category almost, is transactional funding. Now, let's say you've got a real estate transaction that you're doing. You're going to be in that deal and out of that deal. You're going to be taking ownership very quickly, and then you're going to be flipping that deal. But you need the financing to make that deal work for whatever reason. Now, I'm not going into double closes and where buyers come in with the money or anything like that. Again, that's a bit more on the creative side. If you're needing the funds to make this deal go together, transactional funding is something that's out there where you're going to be paying some fees for that money, but you're going to be in and out, and you're just going to be working that into the overall costs of making that deal go together. And when you're figuring out the profits of that deal, you can say, all right, is this something that I can use transactional funds with and it's still going to be profitable? You know, those kinds of things you can do your due diligence on. If you've got the same type of transaction going on, but you're going to be in that deal for a little bit longer, handful of days possibly, well, there's extended transactional funding. Now, different markets dictate how many days you can be getting this extended transactional funding. So it's just important to realize that if you're thinking, you know, I'm not just going to be in and out. It may be several days. I need some extended transactional funding. If you know that that exists and you start to build the relationships with some of these lenders, well, then you have the chance to figure out which kind of deals may go with which kind of financing when you need that outside financing, when you aren't able to put it together creatively on your end and you need to go and get some financing. You can start to think about, okay, my exit strategy as far as acquiring, controlling, and ultimately flipping this property, what kind of financing is going to be needed for this particular exit strategy? Will the numbers still work? Because the numbers are always going to tell you if a deal is going to work. Numbers are always going to tell you if there's profit in that deal, so you can get excited, right? With that in mind, you can start to think about the deals that are coming in. You can say, all right, if I'm going to be getting some kind of institutional funding or even just outside funding, what kind of funding is going to be best for this deal? It's going to be hard money. It's going to be transactional funds. It's going to be extended transactional funds. Another way to customize this a bit more is when you have relationships with private lenders who understand the process a bit more. And as you're doing more deals and they can see that you're a reliable source for the income and the return on their money, they may be more willing to work with you on the deals that you've got. So for one, they know that the collateral's there with the type of deal that you've got, but also they know that you're doing a number of deals. They know, relatively speaking, what the time frame of the return on their money is going to be, and they might be willing to cut you a better deal on the interest and the fees, knowing that you're somebody that is coming to them with deals that they can then park their money for a while, invest that money, and get a certain return back, and do that over and over again. That's the beauty of private lenders. A lot of times that is a nice midpoint between doing something creatively on your end as far as financing is concerned and going to, say, a hard money lender, transactional or extended transactional funds. In the middle, you might find a sweet spot with private lenders. It's important to realize, though, when you're going out and trying to build the relationships with private lenders, there are certain rules out there that you don't want to break. And that's beyond the scope of this video. Just know that you need to do a little due diligence as to how you start to build the relationships with these private lenders. With that being said, over on my webpage, realestateschool.vip, over on the school store, where you're going to find some sources of funds that are already waiting for investor deals. Sometimes these are going to be collections of people that are looking. So in that respect, you know, a lot of the heavy lifting has been done for you. So if that helps, that resource is over there for you. Another thing that you might consider is business credit. Now, I have built relationships with business credit providers, and a lot of my subscribers really like them. One of the reasons is because you're getting business credit that is not in your name. So again, if you don't have good credit, that's okay. If you don't have good income, that's okay, because these are credit cards essentially that are going to go into your business name. So it's separated from your personal credit, which is really important. And really the aspect of business credit is you're able to get these credit cards at very low interest rates, oftentimes zero interest, for X amount of time. And when you have a number of these, you then have access to a number of dollars that you're getting very cheaply, but you have to realize you still have to pay that money back. But oftentimes you can go from one credit card to another as far as the business credit is concerned. So if you've got a certain amount on a credit card that's 0% interest, but you're reaching that time frame where it's going to start to charge interest. Well, if you have another one of these credit cards that is 0% interest or very low, you can then try to roll that over into that credit card until the deal's done and you can ultimately pay everything off. Like I said, this is not free money. You do have to pay it back. The good news is also you can use this money for whatever you want business-wise. You can use it for overhead. You can use it for marketing. So it's another piece. When it comes to financing your business activities, business credit can be a potential that you might want to tap into because the money is cheap. Another thing to realize here is if you as an individual were going to, let's just say, search the internet for business credit cards, and let's say you were able to acquire some of the credit, you know, let's just say also it's 0% interest. Being someone that doesn't have the relationships with a lot of the lenders out there that offer these kind of credit cards, you might get some credit, but the limits might not be as high as you could get if you had the relationships already established and knew the type of criteria that is used to bump up that credit. And that's why certain companies out there that offer business credit, they've got the relationships with many of these lenders that offer these type of low interest credit cards to businesses, and they know how to get a higher limit. Again, as I'm making this video, I have some of those resources over on my realestateschool.vip site over the school store, so that if you're going to be trying to get that kind of credit, it's really important to have a relationship with a company that has a relationship with the type of lenders out there that are offering that kind of business credit at sometimes 0% interest, so that they know the different lenders out there, so you potentially can get more credit on each of the cards that you're getting. Because we may not know the different lenders that have the best deals for business credit, but these kind of companies do, so they have the chance to get you more credit cards for your business at a lower interest rate, and those then can add up. You can be using them for what you want in your business, and of course, you've got to pay that back. Another source is mortgage brokers. Mortgage brokers are a go-between between you and a lender. The mortgage broker sits in between, and really how I think about it is, if you go down to a bank, say in your town or city, they're going to offer you the loan packages that they've got, and that's pretty much going to be it. A loan broker has a relationship with a lot of lenders, oftentimes not the biggest lenders, so there's a bit more leeway as far as what these lenders will loan on, and a mortgage broker has several relationships. So when you are going to a loan broker and they have relationships with a lot of different lenders, and you're saying, this is what I need, they can then be scouring the different types of relationships out there that they've got with the lenders and the different type of loan products that these lenders are willing to loan on, and see if they can match you up with that. Here's something to realize. Not all loan brokers have the same lender relationships. And if you start to realize that if you go to a loan broker and they say, sorry, can't help you with this deal, and you're thinking, okay, I'm out of luck, I just can't find a loan on that. I've gone to a loan broker. They have a lot of relationships. Nobody's saying yes. Realize that if you went to a different loan broker, chances are they've got relationships with different lenders, and they may have a loan product that will fit what it is you're trying to get a loan for. So if you've got a relationship with 1, 2, 3, 4, 5 different loan brokers, and if one can't do a deal for you and you go to the next one or the next one, chances are after you go to a handful of these, if they can't do the deal, then you have a better idea that, okay, maybe this just isn't going to work. But never give up. Always realize that, we have to keep knocking on doors a lot of times if the deal is good. And if you've got to go to a private lender or people that have a group of private lenders or some of the other sources that we're talking about here, it might be worth it. But if you don't have a deal that really has a lot of meat on the bone, maybe it's something that you should reconsider. There are a lot of real estate deals out there, and if there's something that's just going to be way too risky for you and for the lenders out there, it might be telling you something. Maybe that deal isn't really what it is cracking up to be, or maybe our emotions are getting the best of us and we're just thinking, I need a real estate deal, and okay, here's somebody who will sell to me, but at the end, they're just dumping a problem. And a lot of times that's the case, but there needs to be a lot of equity in that deal, a lot of profit in that deal for us to take over the problem that whoever's selling that property, be it an institution, be it HUD, bank REOs, anything like that, or a private individual, if they've got a problem, we want to be compensated for taking that problem off of their hands. So if there's not enough profit in that deal and it just doesn't look like, it's worth your time, hey, that's a sign. Move on. Our time is valuable. Your time is valuable. So if you have a no from everybody, crunch those numbers again and say to yourself, all right, is this really worth my time? And if you say, yeah, and here's why, okay, great. You've done some due diligence, and then you can keep moving on. But if you say, well, maybe I'm just excited about this deal. Maybe I just, hear so much about real estate and think, well, I need to get into real estate because it's going to make me a lot of money, and I just want this deal. If that's the case, and there's really not the profit in there that is going to make you happy, and conversely, maybe it's going to be a problem that's going to bother you for a long time or maybe hurt you, pass on that deal. That's the beauty of doing some of the due diligence, crunching the numbers and seeing, is there a profit in this deal that I'm happy with the amount of time and risk that I'm going to be putting into this. Okay, hopefully now you have a number of different sources that you can turn to. In the case that you can't put together a deal with creative financing, start to build those relationships, start to reach out, find who can do what their criteria is, what their fees are. So you start to realize which lenders you like, which lenders have the potential to help make your deal go together when you aren't able, of course, to put together a creative financing type of a scenario on your own. All right, before you go, make sure you get my book, How to Find Millions in Private Money Loans. You can get that absolutely free over at findprivatemoney.net. Also, make sure you get my free daily newsletter called Extra Income Sources. In case you'd like some extra income sources that you can be working from home right now, simply go over to passiveincomestacking.com to get that. And last but not least, be sure and go over to realestateschool.vip, where the tuition is free because you are the VIP. Go over to the school store there, and you'll see some of the funding options that you might be able to tap into. Some of the relationships that I've created over the years that have funds that are just waiting for real estate investors and good real estate deals. So I hope that helps you. I'm Mark Walters, and until next time, I'll share more with you soon.